Hi friends, good evening everyone. So today in CA final financial reporting paper, let us see a new chapter, which is chapter number 15, analysis of financial statements. So as I mentioned earlier, the syllabus in new scheme is almost same as the syllabus in old scheme. Overall, I do not see much difference between old scheme and new scheme, syllabus as far as CA final financial reporting is concerned. However, there are certain spin-offs, there are certain mix and match kind of things. So if you look at this ICI material, this is fourth module I have opened on the screen. In this, please make a note of it. Chapter 15, analysis of financial statements. Chapter 16, professional and ethical duty of chartered accountant. Chapter 17, accounting and technology. These three are new topics added in the syllabus. Now, today, let us start with chapter 15, analysis of financial statements. Okay, so I am opening this document. Now, if you look at it, the topic is running into 54 pages. Now, if you look at it, any chapter you take in CA final level, especially financial reporting, everything is voluminous, huge. So the one of the success factors of student should be to filter what is not required. So you should know what you need not study. You should know what you need not study. So let us go through this chapter number 15, analysis of financial statements. So look here. First, they have given learning outcomes. So there are some 4 or 5 bullet points given. Let us quickly run through. First one is examine key features of financial statements and its relevancy for better reporting. Do I need to focus on this as a CA final student? No, don't worry about it. Examine the key factors to be kept in mind in preparation of financial statements. No. Follow the best practices in the preparation of financial statements. No. Analyze common mistakes incurred by the preparers of financial statements in the presentation of financial statements with respect to Schedule 3. Yes. So if you look at it, the word used is preparers of financial statements. Preparers. So who prepare financial statements? The management, isn't it? So in the question, what they give is some of the employees of the company or some of the managers or directors of the company, they might have done some accounting treatment which is wrong. Why? Because if you understand the learning outcome, mistakes, oh my God, that means the preparer of financial statement has done some mistake. You need to analyze it. So analyze the mistake. This is what you are supposed to do. Okay. And the next bullet point is rectify the mistake. So 1, 2, 3 bullet points are quite elementary, basic, fundamentals. No need to worry about it. The whole chapter is about one, analyze the common mistakes incurred by the preparers of financial statement. So an employee or an accountant or the manager or one of the directors who's preparing financial statements of X Limited, he might have done some mistake. How do you find the mistake? How do you analyze the mistake? And how do you rectify the mistake? So rectify the mistakes found in financial statements by addressing the issues. How do you address the issue? And prescribe the correct presentation and disclosure. That means a high level rectification of errors. In CA Foundation, you might have seen rectification of errors. In your +1, +2, or in your BCom, in accounting, you might have seen rectification of errors. Okay, something, for example, wages paid towards construction of building have been debited to wages account. Then you think and you say, okay, if I incur wages for construction of building, that is, capital expenditure in nature, I should not charge it to revenue account. I should not charge it to wages account. So I rather should capitalize it. So what the accountant has written, what is the journal entry accountant has written, he might have written wages account debit to cash. Okay, wages paid in cash. And then profit and loss account debit to wages. This is what he might have done. Now, what you are supposed to do? Building account debit to wages account, being wages paid for construction of building have been debited to wages account, rectified now. So you are doing the same thing now. But there it is in passing a journal entry. In foundation, it is about passing a journal entry and you will pass rectification entry. Here, it is about treatment of an item. It is not just passing a journal entry. It is, little above, higher level. So chapter 15 is about identifying common mistakes and rectifying the mistakes. That's it. You need to correct it. Now, if you look at the overview of the chapter given in second page, analysis of financial statements, there are 3 bullet points. One is characteristics of good financial statements. Second one is best practices in financial reporting. And third one is illustrations based on Ind AS. One, characteristics of good financial statements: true and fair view, relevance, understandability, consistency, regulatory compliance, universality. No, 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 no. Ignore it. If you want, you can just read it. I'm not saying don't read it, but is it going to be relevant from concept point of view or from examination point of view? The answer is no. Then come to best practices: compliance, complete, simples, and specific, transparency, materiality, integration, which is important, disclosure of significant accounting policies, disclosure of key estimates and judgments, integrated approach. Again, this is important. Just, from practice point of view, it is not important maybe from exam point of view. So the whole umbrella of best practices is also not relevant. No, 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 no. This is the most important area, illustrations based on Ind AS. This is what we are going to do today and, in the coming sessions. Now, if you look at page number 3, they have given the introduction to this. Then they have given financial statements of corporate entities. They have given about Schedule 3. They have given characteristics of good financial statements. Again, whatever the bullet points they have written in the course overview in the second page, they will elaborate it. True and fair view, relevance, understandability, consistency, regulatory compliance, universality. Then they have given one beautiful diagram which has no meaning. Okay, don't worry about this. Then best practices. Again, same thing. Whatever the bullet points they have given, they explained it. Compliance, completeness. Okay, then simple and specific. They have given few examples, like they have given about derivatives, they have given about inventory, all this stuff. Okay, then transparency, materiality. You know all these things, right? Integration of notes, blah, blah, blah. They have given disclosure of material accounting policies, significant accounting policies, disclosure of accounting estimates and judgments, integrated approach. You don't need to read anything. Now in page number 11, they have given case studies based on Ind AS. This is where you start reading chapter number 15. There are how many case studies? I think they have given some 7-8 case studies. So if you read these case studies, that's it. So again, there are mistakes done by accountant. There are mistakes done by the person who's compiling or preparing financial statements, and we are going to analyze the mistake, identify the mistake, analyze the mistake, rectify the mistake. That's it. So case study 1 is starting in page number 11, then it runs into page number 12, 13, 14, 15, Ind AS 109 is there, and there are so many other standards involved that runs into some 3-4 pages. We'll start with case study 2, which is simple. I'm not skipping case study 1. We'll come back to case study 1. We are going to case study 2. Now, Pluto Limited has purchased a manufacturing plant for 6 lakhs on 1st April 2000 X1. The useful life of the plant is 10 years. Take pen and paper, start working out case study 2, chapter number 15. Okay. Let me open one Excel sheet, put the heading, chapter 15, analysis of financial statements, and write down case study 2. Under that, write down cost of the asset. Cost of the asset, 6 lakhs. Next line, useful life, 10 years. Therefore, depreciation per annum, 60,000. 6 lakhs divided by 10 years, that comes to 60,000. Okay. On September 20x3, my system is slow. I do not know. I'm not able to open Excel sheet, but that doesn't matter. You have written that small working note. Then we are going forward. On 30th September 2000x3, that means how many years the asset is being used till today? So 1st April 2001 or 2011, 2021, whatever it is, 2000x1, 1st April. So up to 31st March 2000x2, 1 year, 31st March 2000x3, 2 years, 30th September 2000x3, 2.5 years. So you used the asset for 2.5 years. Okay. So for 2.5 years, what is the depreciation? 60,000 into 2.5 years, 1,50,000. So what is the carrying amount of the asset at the end of 2.5 years? 6 lakhs minus 1,50,000. So case study 2, cost of the plant is 6 lakhs. Life 10 years. So depreciation per annum 60,000. Asset used for 2.5 years. Therefore, depreciation, accumulated depreciation is, here I'm writing 2.5. So here I write this into this. So cost of the asset, this is acquired on 1/4/2000x1. So this is 30, then September 2000x3. So here I write carrying amount of asset at the end of 2.5 years is, this is cost of the asset minus accumulated depreciation. So carrying amount today is 4,50,000. These are the basic workings. Okay. Now, Pluto temporarily stops using the manufacturing plant because demand has declined. Oh my God, oh my God, oh my God. Somewhere you have seen this. Remember, the rule is when you are doing chapter 15, you probably might have, or you should complete all the other chapters. Unless you know all the accounting standards, you cannot do this chapter. Because if it is rectification of error, that could be a wrong application of any accounting, treatment prescribed by any of the standards. So they are referring to Ind AS 105, non-current assets held for sale, disposal groups. So, however, the plant is maintained in a workable condition and it will be used in future when demand picks up. That means, is this asset which is in working condition, which has no issues at all, which is actually not held for sale, which is, which is probably stopped. The company stopped using it because there is a fall of for demand of the final product. The machinery is good, but the machinery is, used in manufacturing product A. The market for product A declined. So the management stopped using the machine, stopped using this plant, and they are waiting for the market to pick up, demand for this product A to pick up. Now, if you remember Ind AS 105, whether in this situation, is it okay? Is it correct to classify the asset as held for sale? The answer is no. Standard clearly mentioned this is a situation where the company is still anticipating to recover the cost of the asset by way of depreciation, not by way of sale proceeds. Are you intending to sell the machine? No. Are you intending to recover the carrying amount of the asset by way of sale proceeds? No. Are you intending to use the asset again? Yes. So you cannot classify the asset as held for sale. Now, the accountant of Pluto Limited decided to treat the plant as held for sale. Oh my God. Until the demand picks up. So these unqualified doctors, unqualified accountants, unqualified doctor, can I use the word? No. If he's unqualified, he cannot be doctor. Okay. So these kind of people with half knowledge are more dangerous. Isn't it? So what this guy is doing, he decided, no doubt, I have decided. Okay, you take my word, I have decided to treat the plant as held for sale until demand picks up. Idiot he is, and accordingly measures the plant at lower of carrying amount and fair value less cost to sell. Treatment is correct. If the asset is held for sale, this is right. Carrying amount, fair value less cost to sell, whichever is lower. Correct. But the question is, can you apply Ind AS 105? No, idiot, you have to apply Ind AS 16 only. This is property, plant and equipment. This is not non-current asset held for sale. So probably he might have even shown it under current assets in balance sheet. If any asset is held for sale, you will show it under current asset. So also the accountant has also stopped. Idiots too also JICI. The accountant has also stopped charging depreciation for the rest of period. Wow, super. Considering the plant held for sale. The fair value less cost to sell on 30th September 2000 X3 and 31st March 2000 X4 was 4 lakhs and 3.5 lakhs respectively. The accountant has performed the following working. Wow, super. Purchase price of plant 6 lakhs. Okay. Accumulated depreciation 1.5 lakh. Okay. Carrying amount 4 lakh 50,000. Okay. Till that even we have written. Up to this, correct. So this is the story on 30th September. Okay. Now, on 30th September, what is fair value less cost to sell? Fair value less cost to sell 4 lakhs. On what day? On this day. So, if Ind AS 105 is applied, the asset is to be valued at lower of A and B. What is A? This is A. What is B? This is B. If Ind AS 105 is applied, the asset is to be valued at lower of A and B. Okay. Then on C, I am writing C on 31/3/20 X4. That means next financial year, next balance sheet date. Fair value less cost to sell is 3,50,000. So this is the story on 31/3/20 X4. So if Ind AS 105 is applied, the asset is to be valued at lower of A and C. What is A? Carrying amount. What is the C? Fair value less cost to sell on the date of balance sheet. So on 31/3/2000 X4, the value of asset for balance sheet purpose is 3,50,000. Then probably impairment. You might have charged impairment loss. So 4,50,000 has become 3,50,000. So 1 lakh is impairment loss. This is what the accountant has done. Okay. Now look here. In the balance sheet, he has shown it under current assets. Why? Held for sale. Assets classified as held for sale 3,50,000. Analyze whether the above accounting treatment made by accountant is in compliance with the Ind AS. No. If not, advise the correct treatment. So what is the correct treatment? Simple. Correct treatment. Cost of the asset purchased on 1/4/2000 X1 is 6 lakhs. Then useful life 10 years. Then depreciation per annum is this divided by this 60,000. As on 31/3/2000 X4, 3 years. Accumulated depreciation is 60,000 into 3 years, 1,80,000. Therefore, carrying amount of the asset as on 31/3/2000 X4 should be this minus this. It should be 4,20,000 in your balance sheet. But remember one very, very, very important thing. In the question, they said fair value less cost to sell, which is considered to be the revalue. If you are, see, you can either follow cost model or revaluation model. As per Ind AS 16, property, plant and equipment. But whether you are following cost model or you are following revaluation model, whatever the model is, if you know that there is an impairment, you should book impairment loss, isn't it? You should book impairment loss. So fair value less cost to sell given is 3,50,000 as on 31/3/2000 X4. So therefore, impairment loss is 70,000. So this will be shown in the balance sheet under non-current assets, not current assets. It is not held for sale. You are not applying Ind AS 105. You are applying Ind AS 16 only. Impairment loss 70,000 you will book. Loss should be taken to P&L in profit and loss account, in income statement or statement of profit and loss, SOPL you call it. In SOPL you will show 70,000 loss. That's all. This is correct accounting. Pavan sir, everything seems to be quite simple. No, ICI will not make it simple. It is simple actually. But the way how ICI has written the answer sheet, the above treatment needs to be examined, property, plant and equipment, Ind AS 16, Ind AS 105, non-current assets held for sale and discontinuing operations. Then paragraph 6 of Ind AS 105, non-current assets held for sale. Paragraph 7 of Ind AS 105. Paragraph 8 of Ind AS 105. Paragraph 13 of Ind AS 105. 14 of Ind AS 105. Paragraph 55 of Ind AS 16 states that, what is this? ICI wants you to write the whole Ramayana Mahabharata right from chapter 1 to chapter 18. But Pavan sir, there are only 17 chapters in book. Are Rubber Manda. I am not speaking about chapters in FR. There are 18 chapters in Mahabharata. Sorry, FR only we do not know. What do we know about Mahabharata, sir? Congratulations. Good for you. So they want you to write like this. So not one student, so many students, they ask me, Pavan sir, is it necessary to write answer like this? Are you kidding me? Can any human being write answer like this? No. Even if I am student, probably I'll not write answer like this. I might not be able to write answer like this. Point number 1, memory game. You cannot remember all these things. Paragraphs, impossible for a human being. Point number 2, time. If this question is given for 6 marks, the answer should be written in 9 minutes. You remember the rule. For 1 mark, you cannot spend more than 1.8 minutes gross, 1.5 minutes net. 100 marks, 180 minutes. 1 mark, 1.8 minutes gross. That includes everything. Net 1 mark is equal to 1.5 minutes. So if it is given for 6 marks, you have to write in 9 minutes. In 9 minutes, how will you write this much? Then they are writing, after a lot of theory, purchase price 6 lakhs, accumulated depreciation 3 years, 1,80,000, 4,20,000, impairment loss 70,000, carrying amount 3,50,000, in balance sheet non-current assets under that property, plant and equipment. Then impairment loss they have given, fair value 3,50,000, value in use not given. Even if you take 0 also, recoverable amount is whichever is higher. Recoverable amount is higher of fair value and value in use. So higher of these two is 3,50,000. So carrying amount 4,20,000. Then your recoverable amount is 3,50,000. So impairment loss 70,000. That's all. So that is what the answer is. We have written the same answer. So this is about case study 2. So all the questions in chapter 15 are like this. You understand? So any doubts before we move this, before we move forward?